Hello, Mr. Radigan. It's time
Nice to be seeing you.
Time for Truth or Skepticism. Wednesday, 1 o'clock. Fed just came out. We're all over this like usual. Welcome. How you been?
I've been very good. I'm looking at this. I mean, I know that you'll say every Fed decision is a non-event, but today's Fed decision is a maximum non-event, I would say.
I mean, it's right in line with what they were looking for, so I would agree with you. It's a maximum non-event. I just looking at my stuff, it looks like, yeah, hey, it's a first-class non-event. What do we do now?
I guess the only relevant part of this, this situation being the Fed, is your opinion of the market's opinion of the inflation risk, right? I mean, do you feel that inflation is a relevant consideration in the financial markets right now?
I do not.
Mm-hmm.
Why not? Well, because markets are forward-looking. It never is a consideration. It's already been, I mean, is there something that the markets, for whatever reason, don't actually know about? Like,
what?
I mean, is there something that markets don't know about that I'm confused about? Like, I mean, for me, markets already know everything there is to know. What is there not to know?
I mean, yeah. I mean, there's obviously lots not to know, but to the suggestion that you or I would know before the market knew is absurd. But I guess also the suggestion that the market knows everything is equally absurd. But it's interesting to me that you think that the inflation dynamic you think it's a cultural and political dynamic, not a financial dynamic, basically, at this point.
Well, hold on. There's a difference between the word dynamic and
or consideration, relevant factor.
Exactly. So it is a dynamic because it's something that we live with. So it's a dynamic part of our lives. But as far as being priced and as far as having some, some shock to the system that it's not already priced in is impossible. So, so for me, I mean, all the Fed does is kind of what was expected of them. I mean, there was a 90% chance they were going to do exactly what they did. The reason the market sold off is probably because something that they said or didn't say, with whatever they did movement wise. So, and I don't even know what that is because I'm not, I'm doing this with you. I'm not paying attention to
I
that.
understand. Yeah.
So,
if you were to look into the abomination that is Tesla in the context of Twitter, and then I have a bigger topic today, but is Tesla's sell-off entirely a function of Musk buying Twitter?
Yes, because yes, it is. I mean, obviously, there's probably other factors that are involved in the world and blah, 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 and all that kind of stuff. But the reality is that Tesla is Elon Musk as a the idea and ideal of who Elon Musk is has been tarnished, and he went from being boy genius and to being kind of a dangerous human. And so I think that and also one that you can question the use of his resources, and you can question a little bit about lots of things now, like spite and other things that you didn't, you don't think of, like when you think of really good CEOs or innovators or stuff like that, there's certain parts of it that certain things you don't take in. Like when you think of Tim Cook as a good CEO just based on performance, you have to, you don't think of Tim Cook as being a certain type of person, and he's never been exposed to that. to be that. And I think when you think of other, entrepreneurs or geniuses or things like that, sometimes, you can say they're a little eccentric, they're a little this or that, but you don't think of them the way you think of Elon today. I think Jimmy Kimmel did a great piece on it, on him, just in his monologue the other night. And whether you saw it or not, it doesn't really matter. But what point is, he basically exposed him for what he is. He's not what you thought he was. He might still be a genius, but he's not what you thought he was.
Mm-hmm. So. And because Tesla seems to be where the stock market is expressing that opinion, and obviously most of the Tesla sell-off happened before Elon revealed himself, so to speak.
Well, Tesla's making a new low for the year right now at as we talk, at $156.50. It was maybe a dollar or two lower already tonight, but today. But I guess the point is that so now the stock has dropped. It's trading the equivalent of pre-split 450. It was trading 900 before, so it's actually lost about 50% of its value. And it was one of the stocks that was able to maintain its value for most of the year. So I mean, I don't think you can attribute this to anything other than Elon he's been exposed. That's it. Mm-hmm. And so it's kind of sad too, because he didn't need to do this. Even if he bought, what I didn't understand is, okay, so he screwed up and he bought Twitter, right? He'll admit it. He screwed up. He bought Twitter. It was impulsive. He did something crazy, but in the back of his mind, as people like to say, well, he was crazy because he got a little drunk and did whatever, and got high, whatever, and he decided to buy Twitter. But he really, I think he's had his sights set on Twitter for a long, long time, like for 10 years or something. But what he should have done to protect himself and his empire, whatever you want to call it, he should have just hired somebody to run Twitter. He could have brought in a heavy hitter. He's got plenty of money. He could have brought in the best available player in the world to run Twitter, and he had zero risk, because if it fails, he dumps it off on this other person, and if it's successful, he's the genius, and he has no risk at all. Instead, he decided to do it himself in a half-ass, asinine way, where he embarrassed himself. He embarrassed everybody at Twitter. He made himself look like a complete idiot. And in the process of doing that, he also, again, he exposed himself for being kind of the nitwit that he is. And I think he's turned a lot of people off, myself included. And I'm a Tesla lover, You
mean the car or the stock, or both?
The car. Care about the stock. It's my best performing stock of 2022, because I've just been selling premium in there all year. So it's my number one performing stock. So I can't complain about it. I just, But
do you look at your car differently? Because you are a Tesla owner.
I think about my next electric car maybe differently. But I try not to. It's a brilliant car, and designed by a genius, because I have other cars and they're horribly designed compared to Tesla. So I feel like I have to give him all the respect in the world for that. But if his focus is on worrying about who's posting what on Twitter, Tesla's going to suffer.
Mm-hmm. And the whole Elon Twitter thing becomes a microcosm into a much, 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 much bigger issue, which is a matter of data privacy and data utilization. Twitter already was operating under an FTC waiver for previous data breaches. Elon has gone out of his way to harvest old emails inside the company documents and publish them for whatever purpose. tastylive, because it has a new name now, but Tasty has lists. Almost every business has a list at the end of the day, whether it's an email list, whether it's a customer list.
Sure, a list. Yeah.
Yeah. In fact, Richard Branson started Virgin with a list from college subscribers. People don't know this, but he had a failed college magazine. And when that did not become a business, all he was left with was a list. of people that had subscribed to the now defunct magazine. So we decided to use that list to offer the people that had subscribed to the magazine records or music, tapes, music.
I actually had never heard that before.
Yeah, that's how Richard Branson started. Was he had a college mag that failed.
I didn't know.
And he had a list. And then he's like, okay, well, these are young people that want something. If they don't want my magazine, maybe I can send them, record of the month kind of a thing. And then he started signing musicians and did a whole music thing, and basically was working lists thereafter, right? Because then he had a list of people from music, and he was like, well, I'm gonna charter one airplane and offer those people on my list a flight from New York to London. I bring up that story as an example of the power of lists and the power of insight in using lists to build businesses. At the most nefarious end, I would put Facebook or someone like them, where it's just sort of this never-ending data harvest and serving of ads and all the rest of this. Tasty has a list.
Yeah, sure.
My sense and my experience with you is that you're extremely precious with that. In other words, that you go out of your way to maintain the integrity of that list. You don't sell that data. You don't try to market those people things that are not brokerage content and these sorts of things.
Well, we're just to be clear, we're in a regulated business. Mm-hmm. That is not even an option. Like we're, in the business we're in, our customer information is our lifeblood, and it's also protected by the regulators. So it's not even an option for us. Like even if the brokerage firms can't sell their customer, it's not even an option in our world, but in other worlds it is, but in our world it's not.
Do you think that the brokerage rules, I didn't know that actually, but do you think that the brokerage rules should apply to other companies? I mean, I think most customers probably get assurance from the fact. What I'm getting at is there's great things that can be built from lists, virgin, and then there's also, a sense of constant predation and the lack of privacy, whether with the big social media companies, and then everybody else is somewhere in between. And what I'm interested in discussing with you is, where the rules ought to be.
Sure.
And because there's both the value of the list and the exploitation and liability thereof, and whether lists should be more heavily regulated the way they apparently are in the brokerage industry.
Well, it's not that the lists are regulated in the financial service space by design just for lists. It's more like it's a protection of the customers' privacy that's protected on every which way. But I walk into like a Nordstrom rack or something, and I buy something, and they say, "What's your telephone number? And can you give us your email?" And I say, "No," and they say, "Okay, thanks." Or at the supermarket that I shop at, it'll say, "Can we have your telephone number?" And I'm like, "No." Or if you're on an electronic device and you're buying something, they'll say, "Would you like us to email you the receipt?" And I'm like, of course not, And I mean, I politely decline any ask for any information because I don't want to be on somebody's list. I actually don't like the word list. I think I don't know the whole list concept. In the back of my head, I'm always thinking Schindler's List for some crazy reason. But I don't like a list. There's no such thing. Nothing good ever came from a list.
Are you kidding me? The list is the foundation of all enterprise. I mean, there is not a single business that exists on earth without a list.
I mean, occasionally we'll launch something. When we launched Tasty, we launched a waiting list, which is, I guess I'm okay with that.
But you have a customer list. You know who your customers are. Or
we know our customers, of course.
That's a list.
We don't look at it as a list, but sure, of course. But I get where you're coming from. The first part of your question is, should all customer information be protected everywhere? And I think that, on the surface, the answer would be, of course. But the difficult part about that is that there's a lot of other aspects of those businesses that are that are not regulated. You know, like there are entire businesses that fly under zero regulation, and so we're not going to regulate their lists. You know, we can't even regulate their business. You know, we have bigger problems. So, you know, I mean, what immediately comes to mind is, like, you know, some of the scandals recently in the digital asset space. You know, the whole FTX scandal comes to mind because, you know, okay, so assume they protected their customer list, they couldn't protect the customer accounts. You know, like, so
I understand, but what I'm interested in today is because I think the Richard Branson story is very insightful, and I think that what they did at Facebook was very insightful, going back 20 years now, when basically, you know, you can have a list and it can be worthless, so to speak, or you can have a list that becomes a multi-billion-dollar empire, depending on how you manage that list. I mean, Richard Branson had a list of, you know, 500 people.
I know, but you're talking about an outlier. You're talking about an outlier. You're talking about incredibly rare. You know, if Dylan Radigan wants to go out right now and spend a few $1,000s to a few tens of $1,000s to a few $100,000, you could acquire more lists than you could spend the rest of your life going through, you know, trying to, like, I mean, lists are available. People have put together lists. There probably, some of them are scams, some of them are real, but there's gazillion lists out there on the marketplace. I don't know, you know, I've never bought any of them. I don't know what the value of these lists are. I've never been able to determine, you know, in our own world, other than soliciting our own customers for things like an event or something like that. We don't sell anything, so there's nothing to, you know. So I hear where you're coming from. I don't like, again, I get very freaked out by the term list, because, you know, the last thing anybody wants to do is be solicited by anybody for anything.
Any list ever.
Like, I don't want to be on anybody's list.
Nobody wants to be on a list, but everybody's on many lists.
Yeah, I'm sure. I'm sure. Here, I could show you my text messages today from different campaigns. I don't know how I got on these lists. Like, I'm, you know, I have somebody running, two people running for mayor in Chicago that keep texting me, and I know it's a virtual thing, but
not a list.
I don't know how I got on that list.
I was getting stuff from Georgia. I mean, I've never even been to Georgia.
Oh, yeah. You mean for the Herschel Walker thing? Oh, yeah.
Yeah.
Oh, I was getting a million text messages for that, but I didn't even, I don't even, you know, I don't live in Georgia. I don't vote in Georgia, you know, but yeah. So, I mean, but I'm just not even, it's not even political.
But I guess what I'm getting at is I think lists are actually fundamental and foundational to businesses, because they are, I don't even mean it in the sense of like using lists to solicit for political donations or for customers, but lists give you a basis, a starting point, whether you're Facebook's list of people that are publishing on Facebook going back 25 years, or whether it's the first customers at Thinkorswim that were your first customer base. You know, that the list is that maybe, again, the word I understand is an issue, but that's fundamental to any business. And Twitter, for instance, and no one has bigger lists than social media outside of maybe Amazon. Amazon probably has the ultimate list, because they know everything about everybody. They know what you buy. They know where you live. They know what you do. They know when you do it. I mean, they probably know more than the banks know about you. I wonder how you, I guess, I don't know. I guess, where do you come down ultimately on privacy as it relates to using lists for their non-intended purpose? Let me put it that way.
I mean, it obviously, I'm like any other consumer. It bothers me.
Mm-hmm.
So we don't do it. We can't do it, but even if we could, we wouldn't, because we don't do it because it bothers us personally. So we wouldn't do it to anybody else.
Mm-hmm. I think Twitter and maybe some of these other these social media companies are going to have real problems because of the way that they have managed their lists. I mean, that's kind of where I'm coming from on this whole thing. I think that there's a recklessness.
But who would be on the other side of this? Who's on the other side?
The Federal Trade Commission?
No. Who's on the other side? Like, who likes this idea? Like, nobody wants to be, nobody wants to be on that list.
No,
or any
but
list.
it's been unrelenting, and it's I mean,
I understand. Who's on the other side? There's nobody pulling for
but
this.
there's nobody stopping it either.
I assume it's just something that's very hard to stop, but I don't think there's anybody that's in favor of this.
And yet the FCC and the FTC can't stop it.
Well, they can stop it if you can stop it if you decide that you are going to, the challenge in stopping it is you have to find out who is selling these lists and who is using these lists, and then you basically, you fine them, you slap a fine on them. And if the fines don't work,
and
you
wouldn't
arrest
that
them.
ultimately, yeah, and I think I think that's coming for Facebook, Twitter, Instagram, all those. I think those companies. I think that there's going to be consequences.
But I don't get solicited by. They're not. I don't get solicited by any of those companies on.
Right, but they may be providing the source data for the other lists because they sell data.
They could be, and if that's a part of their business, then they need to have that part of the business shut down. Whether it is or not, I mean, I don't have any confirmation that is.
Do you think that this is an inflection point in social media to have a billionaire take over something like Twitter, to have the chaos emerging? Zuckerberg's vilified, that social media is it's kind of the same way if crypto is moving into a regulated world.
Well, let's put it this way. Well, crypto moving into a regulated world does not bother me, but if I was a Twitter user and I suddenly started getting multiple solicitations every day to buy a Tesla, that would bother me. Or if I'm a Tesla user and I don't have a Twitter account and I keep getting, hey, why aren't you opening your Twitter account? Yes, that would bother me. I think there's other also, we have a lot of things that we have to worry about in the future, which is, potentially, there's in a world of different kinds of digital assets and things that are actually placed on the blockchain, in the future, we have to worry about, the blockchain is exposed to everybody, and then everybody's on that list. So there are things.
Because you're saying the blockchain is just the world's biggest list.
Yeah, exactly. Exactly. And so if we go to some other form of currency that might be different than current currency, everybody's on the list. We'll know everything you do about everything you spend every money on. So I think it's a topic that's really interesting in the sense that it has to be addressed, and that we have to deal with this in the future in some way. But listen.
But where now? I mean, because the other side of it is, and because Josh, who we all know and love, he says he loves lists. He says he loves it when Amazon sends him an email that says, "Oh, you haven't bought coffee in a while. You look like you're probably running out of coffee."
Okay, well, he's a little strange. He's a strange bird. Okay, because I don't really want Amazon to tell me that I'm low on soup dumplings. I don't need to know that from them. I just think we got to be careful about, where we're gonna, hey, your dog's 11. You might want to start looking at new dogs, like that kind of thing. That would concern me. I don't think we're there yet. I think we have a lot of bigger fish to fry. Like there's so many things in the world that we have to worry about, and like war, like tax code, like there's just a gazillion things. I'm with respect to lists.
You're saying lists are not at the top of the list?
Yeah, I think the Elon Musk situation is potentially interesting in the sense that, now you have, how far can somebody reach? Let's go back to Branson for a second. He's got multiple businesses, all under, a virgin
One
name
brand.
under
Yeah.
one brand. I mean, how far does that stretch?
No, I know,
Amazon.
but I mean that's why I started thinking about the list thing, because
I
I just
know.
think because it goes from a magazine to music, and then music becomes airplane tickets, and then airplane tickets becomes
Amazon's another example.
They had a book list, and all of a sudden becomes a everything list.
Yeah. Next thing you know, you walk into Whole Foods and you're
An Amazon customer, you're buying peaches, and it's on the list.
yeah, then you're just walking through the aisles, and instead of taking it, you just point to it and say, "Ship it to my house." you know, like, it's all whatever.
But you could argue that both Amazon and Branson are probably the two best examples in the history of the world of list getting a specific dedicated list, and then.
Well, I wouldn't put Branson in the same category as Amazon. I think there's probably, a lot of people, a lot of things in between. But it's an interesting. I didn't know that that's how he first started. But whatever. I do think it's a really interesting conversation. I don't know that it's a priority over some of our other, priorities. You know what I'm saying?
You're talking about just culturally, socially.
Yeah.
If you're gonna have at it, you would. This is not in the room.
Yeah, I mean, if I was running to be president of the United States, I wouldn't be running on the ticket of, hey, I'm going to address this list thing. I'm going to address.
But if you were starting, like when you started Thinkorswim, did you have a list?
No.
When you were a floor trader who was starting his.
No, floor traders have no idea. We had no idea who we were trading with.
And so who were your first customer? Who were the first 100 customers at Thinkorswim?
Our moms. No, we made a deal with some marketing, some educational partners, and so we partnered up with them to start.
So you used their list. The educational companies had lists.
We marketed to their educational customers. Yeah.
Mm-hmm.
To start off, we didn't really know anybody.
I understand. But ultimately, you were like, we have to find customers. Somebody has customers. Sure. The educational companies are receiving inbound from people that claim that they want to learn about money.
Listen, we took the approach that, hate to use somebody else's line, but if you build something really cool, people will come. And when we started Tasty, it's the same thing. I mean, we were better known at that point, but when you build something cool, people will come. I think people respect, build when you create something that's cool and that it's real. I think if you build it, they will come if it's worthy, and that we took that approach because we actually believe that, and to this day we still believe that.
If you were to look into your list of problems that doesn't include lists or challenges for the marketplace, because you've been saying, well, lists are an interesting topic, but it's not the meaningful topic in terms of social or economic considerations. What do you feel like the most relevant economic considerations are right now?
The most relevant economic,
not inflation. It's obviously not lists. In other words, what's driving economic activity in the United States and the world going into next year?
Well, that's a really tough question, because when you say what's I'm not sure I understand the context.
I mean, it's because you're dealing with a battle between expectations for growth. I mean, because 2023 will likely be the first non-pandemic year, all in since 2019. So you will have had 20, 21, and 22. So 3 years of some version of extreme or marginal pandemic disruption. In other words, are you expecting normalization next year? And do you think that is relevant to markets and economies?
I am. I do expect an inside year with a lot of normalization. Exactly. Like that. That's exactly what I'm looking for.
And I guess my question is, what is the consequence of normalization?
What is the consequence of normalization?
More activity, less activity, more growth, less growth?
I don't know. I mean, my guess is that the whole thing with normalization is things like they get back towards like their averages. So I don't think that there's like a lot of surprises. Do you know, if that makes sense? I think it becomes essentially what you know, like you get what you think you're going to get. That's what normalization is. Like it's right in the range of what everybody's expectations are.
Kind of like today's Fed decision.
Yeah, a little bit like today's Fed decision, like right in the range. Now the market has sold off a lot since the S&Ps have actually sold off 80 handles since 1 o'clock, and it's only 135 right now. So the market has whatever they said was not what people thought they were going to say. But you know, listen, you know, the Fed did what they were supposed to do, I guess. But whatever they said, it wasn't what people wanted to hear.
Because I feel like I'm just looking at like Tesla's at 50 times earnings and General Motors is at 6 times earnings. In other words, I think part of normalization is that you're going to see some of the big tech more of the. I think that the multiples. I think that normalization means that the rate of growth for the mega techs is going to continue to decline, and as a result, the multiples are going to continue to decline. That the big growth in tech, at least existing tech, is behind them. That's what I think. So I think that for the stocks, I think it actually ends up being a lousy year for tech, even if there's growth, there's activity.
Well, the tech stocks don't look good right now, and so they've already had across the board a really pretty violent year to the downside for most of these, you know, most of the tech stocks, the high flyers, like Tesla being down 50% is not any different than, you know, than any other stock. I mean, Apple's one of the few stocks that's not down 50%, but if you go to Amazon and Google and Netflix and everybody else, they're all down over 50%. Some were down a lot more than that. Facebook, way more than that. So like, you know, so the bottom line here is that you've already seen an annihilation off the top. You know, do they have more left to the downside? Of course, probably. But I don't know that that's not that normal. You know what I mean? Like when you say, you know, is there much left on the normalization side? I doubt it. I mean, there's probably some downside left. Is there a ton left? Probably not. I don't think you're going to surprise anybody next year. I think the surprises were this year. I think if there's any surprise at all next year, it's going to be a continuation of the same kind of choppiness and lower markets that we're seeing right now. And so that would surprise people because people don't like that. But I don't think that it's well within the range of expected move.
Yeah, and I don't disagree with any of that, but I do think that normalization includes the decades of hypergrowth in tech are at least in the companies as they exist.
That's just because you can't see right now who the next leader is going to be. Of course,
sure.
Of course, the next leader is not going to be Apple or Amazon or Netflix, you know, or Tesla, because or Google, because they've had their lead for 10 years.
That's my point.
Yeah, of course
their
not.
Hand.
Of course not. That everybody agrees that they're not going to be the leaders of the next bull market. But the companies that are, we have no idea yet who they're going to be. And when they step forward, are they going to be strong enough? We know the leaders are not going to be. And those are going to be the companies that have sold off, you know, dramatically. And those are going to be the companies that are going to be trying to, you know, to reinvent themselves. They're going to be trying to find funding and everything else. You know, we're pretty sure that you're not going to see in the decade before this, you know, the financial stocks were annihilated, and then they were no longer the leaders. Then the last decade, you know, now we're seeing the tech stocks get annihilated. They're not going to be the leaders. So who will be the next group of leaders? I don't think it's going to be the energy stocks. So who's it going to be? It'll probably be somebody new.
I think based on demographics, it's going to be healthcare. Because you have a lot of old people.
Well, you're not the only person to say that. In fact, the healthcare stocks have exploded, and they're at the top end of the range. But, you know, if you want to talk about a boring stock market, there could be nothing more boring than healthcare taking over the lead as the market leaders, because those are not, outside of like a stock like Moderna and, you know, people that actually innovate and create certain, you know, drugs that may prolong life, you know, keep you alive, all this kind of stuff. I do not see healthcare as being exciting for anybody. You know, one of the reasons that so many people got involved in the stock market over the last decade was because there was exciting stories. Like you could get into buying Apple or Tesla or something that you actually used, you know, and if it's healthcare, nobody's going to go, oh man, I love UNH. You know, like
I was going to say Humana. You don't like Humana?
yeah, right, man. That Blue Cross Blue Shield. Well, I think they're private, whatever. But you know, nothing says I'm excited about calling my broker to buy some Pfizer. You know, like I mean, come on. You know, like I can't imagine, you know, a worse scenario for all of us if we're looking
We're
forward.
left with Humana and United Health as our new Apple and Amazon.
It's so my answer to you is that is not going to be the case in any way, shape, or form. The next generation of market leaders is going to be companies that in 2001 you had no idea it was going to be, you know, Facebook, Amazon, and Google, and in 2023 you have no idea who they're going to be, but they're not going to be the people you think they're going to be.
Mm-hmm.
Like it could be Tasty.
Could be Tasty. Could be tastylive.
Could be. Probably won't be tastylive, but it could be. But you know, like I'm just saying, that's my whole point. You have no idea.
Yeah. All right. Well, listen, the market seemed to not care that much about the Fed. I guess to your point, they cared a little bit about what they said, insofar as they decided to sell it a little bit. But
they sold it off a lot. I mean, we're 70 points off where we were when you and I first started talking. 70 handles in the S&Ps. It's almost 2%. So a 2% reversal.
That's a big deal.
Yeah, I mean, it's a 2% reversal intraday like that is less than an 8% chance of happening. So, and we're not even nearly closed yet. So this reversal has a very, you know, it was not, you couldn't see the writing on the wall for this. And after being up huge yesterday and after having the market, you know, rally all day today, I didn't think you'd see this kind of a down move. Not at all. So,
yeah.
Yeah.
Well, here we are. Nice to see your face.
I'm Tom Sosnoff. He's Dylan Radigan. This is Truth or Skepticism. We do this every Wednesday and at 1 p.m. So thanks for joining us. And now, you know, I just want to say one thing to finish up. You messed me up a little bit because now I'm going to start thinking about lists. And nothing is worse than thinking about lists. Like, it is if you couldn't pick a topic in the whole freaking world that's worse for me than saying, let's talk about lists. Because lists to me are I swear to you, Dylan, there's no topic that would drive me crazier than talking about a list.
Well, listen, Richard Branson had a list. You know, with the right list, you can become a billionaire.
Oh, my God. All right, Dylan, have a great week.
All right, bye.
Take care. Goodbye.